I think we're starting to see cracks in the labor market. The Fed is concerned about that. And because these CPI numbers were not anything extreme, anything way out of expectations, I think that gives the Fed maybe a little more confidence to cut. Good afternoon. We have the labor market showing some challenges right ahead of the Fed meeting coming up next week. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal is to leave you feeling more empowered after every interaction. And we certainly try our best on these weeklies to share some of the news data trends we're watching, but weed out some of the noise along the way. And this week is a very good example of that as we gear up for the next Fed conversation, which we will touch on our question of the week about what to expect here next week coming up for the Fed decision and the press conference to follow. Before we get there, everything we're going to cover today tees up what to expect for next week. So we basically are looking at jobs and we are looking at inflation this week, which, as you might know if you follow this conversation, those are the mandate from the Feds as well, or excuse me, the mandates from the Fed. Labor market and inflation are the two mandates from the Fed. So that is really what we're going to cover. It'll tee up our question of the week about what to expect in the Fed decision there next week. But let's just kick it off with jobs. So what I want to do to start is go back to last Friday. Last week was the jobs week where we get a lot of the prior month's data. And on Friday, we ended jobs week with the employment report and the unemployment rate. So the employment report shows that we added only 22,000 jobs for the month of August there. And the reason this is important is because number one, keep in mind, a lot of times these numbers have actually been revised down. Something like 1 million jobs or maybe even more than that were revised down here more recently. So keep in mind some of these numbers, even when we get them, are actually maybe a little optimistic as well, but basically only added 22,000 jobs versus expectations of around 78,000 and added roughly 79,000 the month prior. Okay. Now, with that, the unemployment report or rate, did tick up slightly. So unemployment rate is at 4.3%. Now, the Fed has been talking a lot about this. It's something to pay attention to. They seem to be watching this number more than the jobs themselves. The reason for that is because we're seemingly in a period where job openings or open positions or hiring has come down a little bit alongside of the employment report, or added jobs, I should say. So we'll see how this translates over time, but this will be important to watch. And basically what this kind of suggests is, again, some challenges, let's call it, to the labor market. So that's one, labor market, maybe seeing some challenges, right? Number two, let's talk a little about inflation. So this week we have PPI, or Producer Price Index, and CPI, or Consumer Price Index, come out. Wednesday, we had the PPI numbers come out, and it was down, believe it or not, 0.1%. So that was quite the surprise. Core was up 0.3%, right in line with expectations. But everybody was really watching the numbers this morning, the Consumer Price Index numbers that came out today on Thursday. And I will share what kind of came out of that. Was, first off, the headline number was up 0.4%, a little bit higher than expected. Expectations were at 0.3% for both the headline and the core. All right, so 0.4%, and really this was driven by food and energy. Those were the biggest factors to this inflation point, which is why the core CPI number takes that out. So again, core CPI takes out food and energy. And core was up 0.3%, right in line with expectations. And most of this really came from shelter as maybe the primary driver, as well as used cars and trucks and transportation services. So hopefully that gives you kind of a high-level view of where inflation came in. Now, this puts the headline number at 2.9% annualized, and the core inflation number, CPI number, I should say more specifically, at 3.1% annualized. All right. So we have a challenging labor market, or at least starting to show some challenges in the labor market. We have inflation well above the Fed's 2% target, and seemingly creeping up a little bit, although nothing out of line. So what does the Fed do next week, of course, is the big question. And what I'll share is that I think today's data point is very important into what we expect here going into next week. So basically, in summary, I believe that we are likely to see a rate cut into that meeting there next week in September. There are conversations of whether it's going to be 25 or 50 basis points. I will share my perspective on that here in a minute. But the reason that I think we'll see a cut is really primarily because of the CPI number we received today. I think we're starting to see cracks in the labor market. The Fed is concerned about that. And because these CPI numbers were not anything extreme, anything way out of expectations, I think that gives the Fed maybe a little more confidence to cut. Although, keep in mind, again, we're nowhere near 2%. So it does seem a little backwards that they would be cutting based on what they've shared time and time again. However, because it has not spiked, we didn't get a surprise inflation, like runaway inflation number here this month. I do believe that we are very likely to see the Fed cut there next week. And again, my take would be 25 basis points is what we see. So 0.25%, right? Now, there's a growing camp that is also suggesting that the Fed may cut 50 basis points, so 0.5% going into next week. And I do want to touch on this briefly. Again, I do expect 25 basis points, not 50. But the reason that I think that is, number one, is because of this challenging situation they're in right now, where employment is showing challenges, but inflation is still not where they want it to be. So I think, I think there's other factors at work besides interest rates on inflation, but let's just follow the Fed's lead on this, and let's say that that really is the measure of what dictates inflation. They would be scared, I think, to cut rates too far too quickly because of what that could mean for inflation moving forward. The second thing I will mention is that the Fed, although they say they don't really care about the market, I do believe that they are aware of how the market reacts to their sentiment, to their decisions, to all the above. And so where I'm going with that is that, number one, again, inflation is running higher than what their target is. But number two, I don't think they want to send the signal to the market that there might be more under the surface than we're seeing at the moment. Now, if there really is, if they're seeing something concerning that maybe is not out there in the current numbers, we could see that happen. But I think if the Fed does cut 50 basis points, I think that the market will take that as a sign that the Fed is very concerned about something that they're seeing. So that's the thing that I wanted to highlight there. Markets today on Thursday, I think, are generally rallying as a result of this inflation number, because I think that it means it's very, very likely that the Fed will cut next week. So markets are up here today as a result of I believe, consensus that the Fed's likely to cut there next week. But I hope that helps. Again, this is really, really important. The CPI number we received today, I think, was critical for what to expect next week. So it's a perfect time to talk about it. But be sure to tune in next Thursday, because next Thursday we do get consumer sentiment and retail sales. But of course, the big thing we'll be covering is the Fed rate decision on Wednesday next week, and ultimately what came out of that, as well as what to expect there moving forward based on what they share in the press conference. So in the meantime, have a great upcoming weekend. Gear up for the Fed decision there on Wednesday, and we'll be sure to share with you all the summary of what has occurred next Thursday at 3.